Hello everyone. This is the pre-market report video for today, 22nd November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Last night around 2 p.m. Eastern Time, Fed released their meeting minutes. US market closed at 4 p.m. So market got 2 hours for reacting. However, it haven't reacted at all. Before last night, in the past 15 trading sessions, US market closed positive on 13 sessions, increased near 10%, and it moved above the crucial resistance 4,500. So early morning itself, profit booking opened the US market slightly negative, and that haven't changed. Anyway, first I will tell just the summary of FOMC meeting minutes. If anyone fancy reading it fully, please have a go. I'll attach the link in the description below. All the participants agreed that inflation was slowing down. They were in the position where they want to proceed carefully and unanimously voted to pause the interest rate on last November meeting. Here, this is positive since on September month, some FOMC members voted for another 25 basis point increase. So only investors were little nervous as some FOMC members' stance in September was the one that crashed the market on October 11th when they released the meeting minutes at that time. However, this November meeting minutes was neither positive since in meeting minutes there was a sentence which making the investors now worry. Here, I'm not quoting the exact word, rather I'll tell the essence. Maybe I'll put the screenshot of those exact words. Anyway, they said if the incoming inflation data increased, then they all agreed to increase the interest rate further. So this statement kind of unsettles some analysts. During my research for this video, I did see this statement highlighted in investing.com, Bloomberg and obviously Reuters. And another not much but slight more of the negative was they haven't discussed anything about the future possible rate cut. So that's the summary. For now, they want to pause the interest rate, but in future, if inflation increases, then they will increase it further. As a result, we know on Monday night, near 100% Fed probability tool highlighted the interest rate pause in upcoming December FOMC meeting that now dropped to 95%. Again, 95% was also a healthy one, but I'm highlighting this to show the shift after the meeting minutes release. Anyway, compared to Monday, 10-year bond yield and dollar index didn't change much. In the end, Dow Jones decreased by 0.18%, S&P 500 decreased by 0.2% and Nasdaq down by 0.59%. Here, though market closed negative, but still in case of US VIX, it decreased mildly and below 13.5. One more thing, Nvidia posted a phenomenal earnings results and even their future guidance was near 15% higher compared to analyst estimation. But still, there too, profit booking made it to close near 1% negative. Regarding oil, roughly it's unchanged. At the time of this video, Brent crude is trading around $82.5 per barrel and WTI crude is trading at $78 per barrel. Coming to Indian ADR, both IT stocks closed negative, whereas both banks closed positive. Particularly, HDFC Bank increased over 1% since there was a report that most of the FII increased their position. Mainly, for example, Charles Lim Capital increased HDFC Bank holding 12.5% in their portfolio just in the last quarter. So, banks looks positive. In case of IT, though both of them closed negative, but in arbitrage case, both Wipro and Infosys got around 0.5 to 1% positive. However, US court rejected the TCS petition for an appeal that lost a litigation case with US Epic Systems. So they said in the next quarter, they will take $125 million provision from the profit. So that looks negative. As a whole, banks looks okay, but IT indicating a mixed trade. Then about Gift Nifty, today early morning it closed at 19,827. Yesterday the premium was just 60 points, equating it with spot market, indicating flat to 20 points negative opening. Moving on, in case of institutional activities, still no FIA buying, but at least after 2 days, DAI turned as healthy buyers. Anyway, FII net sold for 450 crore rupees and DAI net bought for 720 crore rupees. As a summary, US market closed negative, but the Fed FOMC meeting minutes was not as hawkish as it was in September-October month. So even US VIX dropped, it haven't increased. So global momentum is okay. However, last night Nasdaq negative close of 0.5% is a slight concern that with TCS issue might put some pressure on all Indian IT sector. Even Gift Nifty indicating the negative to flat opening. On the positive, banks looks okay. Moving on, as per stock open interest, India Mart, Britannia, L&T Container Corporation of India, Bharat Electronics, Balkrishna Industries and SBI Card got an increase in open interest along with a negative close indicates the short build-up. On the other hand, IEX, IRCTC, SBI Life, Infosys, Voltas and Oberoi Realty got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, nothing I'm aware of before and during our market hours, but after our market hours in the night, because tomorrow is a Thanksgiving day in US, so lots of macro, weekly jobs data, durable goods order, Michigan consumer sentiment and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, yesterday Nifty opened 75 points gap up and made another attempt to cross 19,800 but haven't able to. However, on the positive side, throughout yesterday, it was able to maintain that gap up and closed positive by approximately 90 points. Thus, on the daily chart, it formed a small bullish candlestick with a long upper shadow, and this long upper shadow again for the fourth consecutive day, indicating how much pressure it got at higher levels once it reaches the 19,800 mark. Anyway, it's another candle that formed within the November 16th big candle. So, Nifty continued to face resistance in 19,800 to 19,900 range and also it managed to stay above 19,600 mark for the fifth consecutive session. Even we discussed this yesterday. On Friday, hourly momentum indicator had a positive crossover. Then Monday, it's negative crossover and yesterday again positive crossover. So, until the breakout 19,600 to 19,875 and closed on either side, we cannot say any. However, I can say one thing, for the fifth consecutive day, Nifty forms the higher bottom formation and also RSI value showing positive trend on daily, weekly as well as monthly chart. So, the probable scenario is to break out on the higher side. If Nifty crosses the recent high of 19,875, it can easily move towards 20,000. On the downside, no change. 19,650 to 19,600 is the crucial support zone where 40-hour moving average is placed. In that, a drop below 19,500 could potentially initiate panic. While 19,875 to 19,930 is the immediate resistance zone. Moving on, in case of Bank Nifty, it opened with 200 points gap up and remained positive for throughout the day, but with some volatility, it moved down and finally closed with just 100 points positive. Thus, on the daily chart, it formed a bearish candlestick pattern with long lower shadow. Here, long lower shadow indicating some buying interest but not strong enough. However, similar to Nifty, more or less, Bank Nifty also traded in sideways with low volumes and closed near but below 20, 50, 100 and 200-day exponential moving average 43,700 to 43,800 range. Since all these cluster of moving averages present in that particular 100 points range, it's becoming slight resistance, but I think 44,000 is the important resistance and support is at 43,300. On the downside, a breach below 43,300 might take it further down towards 42,800. Then, regarding weekly options front, the maximum call option open interest was at 90,800 strike and followed by 19,900 with new call option writing at 19,900 and followed by 20,300. Here, please note, new maximum call option writing after 19,900 is at 20,300, not 20,000. Hence, this also indicating how strong 19,900 resistance is and once it broke, it will easily pass above 20,000. Anyway, on the other side, the maximum put option open interest was at 90,700 strike followed by 90,800 with new maximum put option writing at 90,800 strike followed by 90,700. Thus, this options data indicating the immediate support moved from 19,600 to 90,700. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.